I'm with Nonprofit Association of the Midlands, and I am the Public Policy and Communications Manager here. And we are so excited today to have the Student Borrowers Protection Center here to talk about public student loan forgiveness. It's kind of something we all hear about, but I'm so excited to have experts in the house to really tell us about what this is all about. So thank you very much for being here. Just for all the people to know, the chat is disabled since we are anticipating so many people. So please put any questions in the Q&A box and we will get those answered. So I will turn it over to you, Amy. Thank you so much for being here.
Amazing. Thank you so much for having me. I'm really excited to be here. It's a great day to talk about student loans, as I'm sure you've already heard. My name is Amy Salata. I'm the Outreach and Advocacy Manager at the Student Borrower Protection Center, and we're a national nonprofit policy organization focused solely on alleviating the burden of student debt in the country. And we do this through a mixture of advocacy, policymaking, and litigation strategy to rein in industry abuses, protect borrowers' rights, and advance economic opportunity for the next generation of students. As Hannah mentioned, if you could please put your questions in the Q&A feature, that would be really helpful. And at the end, we'll get to as many as possible. I can't give specific legal advice to your specific situation, but I can answer general questions about the program and how to access it. But let's get started. So let me just change my slide. Okay. So to start, let's talk about the Public Service Loan Forgiveness Program as it was created and how it functioned until very recently. So Congress created the Public Service Loan Forgiveness Program in 2007 as a way to help public service workers who are struggling with their student loan debt, and also to make sure that future students and graduates wouldn't be deterred from entering the public service because of their student loan debt. So to put it simply, PSLF is the promise that if a borrower works in public service for 10 years and makes payments on their loans for that time, the remainder of their debt will be forgiven after that time. But as you'll see, and as I'm sure you might already know, it's a bit more complicated than that. So first, I'm going to explain how the program worked and how it works, and then what some of the issues with the program were, and then how you can benefit from the current waiver period to access your own PSLF loan forgiveness. So how does public service loan forgiveness actually work? More than simply working in public service for 10 years, there are normally 4 specific criteria. So first, you have to have a direct loan. That's one of several federal loan types. Second, you need to be in the right repayment plan, which for the program is generally an income-driven repayment plan. Third, you need to be in the public service field. And then finally, you need to make 120 qualifying payments or 10 years worth of payments. And I'm going to drill down on some of these for a moment. Only direct loans qualify for public service loan forgiveness. Direct loans have been the main federal loan since 2010. So if you took out a loan since then, it likely qualifies. But if you have an older loan, a federal family education loan, or sometimes abbreviated to a FFEL loan, or a Perkins loan, those do not qualify. What you can do though is consolidate those loans into a new direct loan, which is like refinancing with the federal government, and it pays off your old federal loan and replaces it with a new federal loan. Under the normal program, when you did this, you lost any credit you had gained towards forgiveness, since you're essentially taking out a new loan when you consolidate. But as we'll discuss in a moment, like during the special waiver period, this isn't the case. You can keep your past credit and apply it to the new loan. So it's important to know that under the normal program requirements, many people were blocked out of the program strictly based on their loan type. Okay, second, your direct loan needs to be in an in the right repayment plan, which generally for the program is an income-driven repayment plan or an IDR plan. It doesn't matter how much you're paying each month, just that it's the right plan. And these plans go by names like income-based repayment or IBR, income contingent repayment or ICR, pay, spelled PAYE, or pay as you earn is the name of the program, or repay, which is revised pay as you earn, spelled REPAYE. Some other payment plans can qualify in certain instances, but in general, you want to be on an income-driven repayment plan. Third, to get public service loan forgiveness, you need to work in public service, and the focus is on your employer, not on your role. So you could work at a government organization that covers most city, state, federal and tribal governments, a 501c3 nonprofit, or certain other nonprofits. You also have to work full-time, which is defined as 30 hours a week, or whatever your employer says is full-time if it's greater than 30 hours. And the 30 hours can be with more than one employer if you have multiple part-time jobs that add up to 30 hours a week. So that's something that you can also do. Excuse me. Finally, you need to make 120 qualifying payments. This is, payments on the right loan, a direct loan, payments on the right repayment plan, an income-driven repayment plan, and during the correct employment. And the payments have to be made in full and on time. And if you leave public service and then you come back, you can continue accruing credits. You don't need to start over. So the payments and the time in employment doesn't need to be consecutive. There have been some impacts on the public service loan forgiveness program because of COVID. So first, for those loans that are getting the payment pause, those that are owned by the federal government, each month of suspended payments counts towards PSLF loan forgiveness, towards the 120 total payments. However, you still need to meet each of the other criteria, and the most relevant criteria is the public service employer. Now we'll talk about what has changed in the program and why. So if you're here, you might already know the rejection rate was 99%. Only some 800 applications out of 90,000 were approved, and folks are being denied because they had the wrong loan, or they weren't in the right repayment plan, or some other technical reason that had nothing to do with whether they did their 10 years of service. And as you can imagine, this was a huge problem and an incredible failure for the workers that public service loan forgiveness was meant to support. Many folks took out debt to become teachers, nurses, government attorneys, specifically because they had been told that after 10 years of affordable payments, their loans would be forgiven. And so this was, a huge problem. But some good news on this front is that in the summer of 2021, the Department of Education, for the first time ever, issued something called a request for information. And basically they asked borrowers to share their experiences with PSLF. So this was an opportunity for borrowers who had worked in public service for 10 years, but who were going to get blocked out of the program because of the bureaucratic program criteria, or someone who had delayed retirement to get those extra qualifying payments, to ask the Biden administration to fix the program once and for all. And nearly 50,000 borrowers submitted comments, and they all had a common theme, that this program wasn't working for those it was meant for. So within weeks of this request for information period ending, the federal government announced a special waiver that would address many of the issues raised by borrowers who filed comments. So for a limited time, the Department of Education will retroactively grant credit towards PSLF loan forgiveness to borrowers for months that previously didn't count for the program, either because they had the wrong loan type or they weren't in the right repayment plan. So we'll talk through these changes now. Essentially, what the department's waiver does is give public service workers credit towards forgiveness, regardless of what type of federal loan they have, for any period of time since October 1st, 2007, when the program began, and as long as they were in qualifying public service work and their loan was not in default, deferment, or forbearance. So even for months in which borrowers didn't actively make a payment, as long as the loan was in repayment status, they can receive credit. And these credits are retroactive. So if borrowers can receive credit for past payments that were previously ineligible. So in short, for any months since October 1st, 2007, that a borrower had any type of federal loan, worked for a qualifying public service employer, and wasn't in default, deferment, or forbearance, that borrower can receive credit towards the 120 months required for loan forgiveness under PSLF. Now, as with PSLF, the income-driven repayment program has not lived up to its promises of delivering on debt relief for borrowers. In April of this year, see, there's a lot changing this year, so there's a lot to talk about today. In April of this year, the Department of Education announced that it would review the IDR process and count some periods of forbearance and deferment. So this means that if you had forbearances up to 12 consecutive months or over 36 cumulative months, that you can receive credit for those months for PSLF. And in addition, the department will also be counting periods of deferment prior to 2013. So what this means is that in some cases, forbearances and deferments will count towards PSLF credit as well. And we're still awaiting on additional details from the Department of Education on what this looks like and how it will be processed. But note that this, will only mean more qualifying payments for some borrowers. No one will lose any credit or qualifying payments as a result of this IDR account adjustment. Okay, one thing to note is that the waiver isn't completely automatic. Normally, PSLF requires that borrowers have a specific loan type, direct loans, as I discussed. And although the waiver allows borrowers with any loan type to get credit, those without direct loans must take some steps to convert their loans into direct loans through a process called consolidation, though they still will get credit for time before the conversion. And almost all borrowers, regardless of loan types, will have to certify with the Department of Education any periods of qualifying public service work that they've had since October 1st, 2007. And the idea here is that if the government doesn't know when you have qualifying work, it can't award you the right credits. All right, importantly, this waiver only lasts until October 31st, 2022. So this means that any borrower who must change their loan type through consolidation or certify their public service work with the department must do so before October 31st, 2022. This does not mean that everyone will receive new credit by this deadline. It just means that the paperwork on the borrower's end has to be completed. And credits will be given on a rolling basis, and the department might take more time beyond this deadline to process everyone. But if you get credits from the waiver, those credits are permanent. So if you didn't receive enough to meet the 120 credit requirement by this deadline, you can still accrue more credits after the waiver, adding to those that you received during the waiver. Okay, with this in mind, there are three things that all public service workers with federal student loans should do. So to figure out what you need to do to access this program, every borrower should do three things. So first, confirm your employer is a qualified public service employer, both your past and present employers. Make sure that they qualify. Second, find out what type of loans you have, and then consolidate if necessary. And then third, certify your employment with the Department of Education. So let's go through these steps now. So first, let's confirm that you have a qualifying employer. Nothing about this requirement changed during the waiver. You still need to work in public service, except that during the waiver period, you don't still need to be employed at the time that you apply for forgiveness after your 120 payments. So if you're retired, but you made 120 payments, while in public service, you can still apply now. Okay, so remember, qualifying employers include any government employers, that's federal, state, local, or tribal. Any nonprofits that have a 501c3 tax exempt status. Certain other nonprofits also qualify. However, unions and political organizations do not. So any organization that has a tax status of C4 will not be eligible, nor will any for-profit employers. And if you aren't sure whether or not your employer qualifies for PSLF, the Department of Education maintains a list of qualifying public service employers that you can search. It's important to note, though, that this list isn't necessarily exhaustive. So if your employer doesn't appear when you run the search, but you still believe that you are in a qualifying public service employment, you can still proceed with the PSLF process. You can access this list by using the PSLF help tool, which is available at studentaid.gov. We're going to be spending a lot of time at studentaid.gov today, so you'll hear that a lot. And the employer database is the first step in the PSLF help tool, so you can quickly access it to check your past and present employer status. Okay, step 2, what type of federal loans do you have? The three major loan types that most folks today have are direct loans, federal family education loans, or FFEL loans, and Perkins loans. For public service workers to get credit to get loan forgiveness for their FFEL and Perkins loans under the waiver, they will have to consolidate those loans into direct loans. Remember, what's special about the waiver period is that normally when you consolidated your loans, you lost any credit you had towards forgiveness, but during this waiver period, you can keep that past credit and apply it to the new consolidated loan. The final step that all public service workers with federal student loans should do is certify their qualifying employment with the Department of Education. Remember that qualifying employers are any level of government, 501c3 nonprofit employers, and certain other nonprofit employers. The form to do this is called the PSLF form, but it was previously called an employment certification form. So if you've submitted one in the past, it may have been called an ECF, but right now, or currently it's called a PSLF form. Borrowers should certify their employment using the PSLF help tool, which is the same tool that you can use to confirm that your past and present employers are eligible. And the tool will generate the form for you, which your employer will then have to sign. Okay, so we've discussed the 3 steps borrowers should take to make sure they benefit from the current waiver. Now I'm going to briefly show you some step-by-step instructions on how to do all this. And we'll start with confirming your employer is PSLF eligible. So you'll need to log into studentaid.gov. And if you don't know your login information, there is a way to reset it and gain access. You'll hover over manage loans in the top toolbar, and then click on public service loan forgiveness in the drop-down menu. You'll see the PSLF help tool there, which you should click to launch. Borrowers can look up all of their employers since October of 2007 in the help tool by entering their tax employer identification number, or EIN, and also your dates of employment. You can check your employer's EIN by looking at your W-2, by asking your employer, or for some larger employers, by Googling them. If your employer appears when you run the search, you can see down here that the state of New York came up when you ran the search. Your employer is a confirmed public service employer, so you should proceed to the next steps of checking your loan types and consolidating if necessary. If your employer doesn't appear when you run the search, you could still be eligible, as this list is not exhaustive. It could mean that no one else from your place of employment has sought PSLF in the past, so don't be discouraged by this, especially if you work for a government agency or a 501c3 nonprofit organization and you know that you are eligible. So some eligible employers will show up as ineligible. Okay, once you've determined whether your employers are eligible, you should confirm what type of loans you have. This can be confusing and many folks don't necessarily know. So to see all of your federal loans, you should log into your online account with studentaid.gov. You'll have a dashboard there that lists your loans. Any that say direct are direct loans, and any that don't say direct will have to be consolidated. For a more granular list, you could also download your aid data, and you can see on this slide how to download your aid data. Now, when you get to your dashboard that lists your loans, you can see the current balance, and there are also little arrows next to all of the amounts that'll break down the loan types that you have. So here you can see that this person already consolidated their loans. They already have direct loans. So once you're on this page, you'll be able to tell which type of loans you have. And you can see other categories listed here as well, like Perkins and Graduate Plus, etc. And then certainly if you downloaded your aid data using the instructions from the previous slide, you'll be able to see which ones are direct and which ones are not direct. Now, if you have non-direct loans, you'll want to consolidate them. So to consolidate your loans, you'll need to log in to studentaid.gov again, hover over Manage Loans, located in the top toolbar, and then click on Consolidate My Loans in the drop-down menu. Okay, this is what the consolidation application will look like, and it'll then guide you through the next steps you need to take, which include selecting the loans that you want to include in the consolidation, confirming the amount and rate, like the interest rate of the new loan, and then selecting your payment plan and servicer and signing for the loan. Now, here is a tip specific to the waiver. If you have a mix of older and newer loans, so some that will be closer to the 10 years needed for forgiveness under PSLF, if you consolidate all of the loans together, the new loan will be awarded as much credit towards forgiveness as your oldest existing loan. So that means that when you consolidate old and new loans together, when the consolidated loan is ultimately forgiven, the whole amount will be forgiven. This is really useful for folks who have older FFEL loans, but newer direct loans. So you might not think to consolidate your direct loans because they're already direct, they already qualify, But if you do consolidate them, they could be forgiven on the same timeline set by the older FFEL loans. And this is true if you have multiple direct loans too, right? So if you have direct loans from different periods of time, if you consolidated them together, they'd all be on the same timeline for forgiveness. Remember that for the regular PSLF program, you need to be enrolled in an income-driven repayment plan or an IDR plan. So when you're consolidating, it's a good idea to select one of the IDR plans as your payment plan. Some of the names for these include income-based repayment or IBR, income contingent repayment or ICR, pay and repay. And these payment plans within income-driven repayment are all different. And there is a payment calculator tool that you can use to help you choose the plan among these four that is best for you, because they all have different parameters, and you'll want to see what your monthly payment will be under each plan and then choose the best plan for you. Finally, let's review how to certify your employment. So just like with confirming that your employers qualify, you'll need to log in to studentaid.gov again, hover over Manage Loans in the top toolbar, and then click on Public Service Loan Forgiveness in the drop-down menu. So we're going to go back to the PSLF help tool here. You'll remember this step from earlier. This was the first step in the tool. So here's where you can add your employers using your employer identification number and also the dates of employment. And then the PSLF help tool will guide borrowers through the next steps, which include identifying the loans that they want to include for PSLF loan forgiveness. And once you complete each of the tool steps, it'll generate a form for you that your employer will then have to sign. Again, this form is called a PSLF form, but it was formerly an employment certification form. And it's the form that you must submit to receive the benefits of the PSLF waiver. Once you have this form, you'll need to have any employer that you are claiming as a public service employer sign the form. And once the form is signed, you must submit it to the designated federal student loan servicer for processing and make sure that you get the maximum benefit that you qualify for. Everyone must submit a new form that reflects all of their public service work by the October 31st deadline to benefit from the waiver. If you worked for a nonprofit that is now closed, or if your employer is refusing to sign your form, there is a box to check on the form that one of these is the case. So if these are issues that people are experiencing, there are ways around them. If you are having trouble and you do check that box on the first page that you can't get a signature, we are recommending that you also submit a W-2 from that time period, because likely the Department of Education will ask for that anyway. So you might be able to get ahead of the ball a bit if you submit a W-2 at the same time that you're checking that box so that they can verify that you worked there at that time. Now, to send the forms, you are able to fax or mail them in. Additionally, if you have Fed Loan Servicing, which is the exclusive servicer for the PSLF program, there is an option to upload documents to their website. You could also do all three of these things. So you could mail them in, you could fax them in, and you could upload documents to the website just to make sure that they're received. Now, one caveat on all this is that the Fed Loan Servicing has announced that it's exiting the student loan market, and it's transferring its entire PSLF portfolio to a company called Mohila. I'm going to get into more specifics on what this means for borrowers in a moment, but want to flag here in case someone currently has Fed Loan Servicing, your account will be transferred as we speak in the next few days to a company called Mohila, which will now be the exclusive servicer for the Public Service Loan Forgiveness Program. Okay, so let's see. So what's the process for getting forgiveness? This is the general process, but it applies to the waiver too. As I mentioned, FIA, operating as Fed Loan Servicing, is currently the exclusive servicer for Public Service Loan Forgiveness. However, all of these accounts are being transferred to a company called Mohila. So borrowers seeking PSLF right now, so if you're going to send in your forms now, you'd send them to Mohila. And then Mohila will do a preliminary review of loan eligibility. And if you have a qualifying loan, your loan will then be transferred to Mohila for processing. Or for servicing, I'm sorry, at which point it'll run through the other criteria. So it'll look at your employment history, and then also find out how many qualifying payments you have. Unfortunately, there have been a lot of problems with people finding out too late in the game that they thought they qualified for PSLF and then something had gone wrong. Remember, only 800 applications out of 90,000 were approved. So for this reason, We recommend that you submit a PSLF form as soon as you're interested in PSLF, then do it every year until you qualify for forgiveness. And then you also do it every time you switch public service employers. You don't have to do this. You could document everything after 10 years, but this way, if you do it, every year and each time that you change employers, it's a great way to catch any mistakes that might be made and deal with them as they come. The Department of Education has stated that they are continuing to review PSLF cases on a rolling basis, so there is no exact timeline for when you might receive notification from them. Finally, if you are, for this piece, if you already have Fed loan servicing as your servicer, that account is going to be transferred very soon to Mohila. The companies will handle the transfer itself. However, it's best practice to keep your own copies of all of your own records because sometimes things can get lost from one company to another. So if this transfer is going to affect you, we'd recommend keeping and downloading all of the account records that you can. Okay, now we'll talk about some common issues that borrowers have faced pertaining to the waiver and then how to address them. And then we'll go over some important takeaways from the presentation and then we'll get to your questions. Okay. So when you submit your PSLF form, it's important to know, it's important to make sure that the form is easy to read. So if your employer has scribbled out anything or written over stuff in your application, it's a good idea to get a clean application from them. Often, if anything is crossed out or written over, like in this picture, your form will automatically be rejected or it could be delayed and your time won't be counted with your other applications. So if you do notice that your employer wrote over anything on the form, I would request a new application that they fill out. When borrowers are completing the PSLF help tool, the form suggests that a borrower must take their loans out of administrative forbearance under the payment pause, stating the following under the subheading, get out of deferment or forbearance. This can be a bit confusing. Because student loans are placed into administrative forbearance under the payment pause, and because pause payments continue to count towards PSLF credit, borrowers do not need to stop postponing payments in order to make qualifying payments. Although the form goes on to state that a borrower doesn't need to remove their loans from the payment pause, we understand how this language can be confusing. So this is another opportunity to reiterate that federal student loans have been under the payment pause, under administrative forbearance for the past, 2.5 years since March of 2020. And so all of that time, if you've been working for a nonprofit or a government agency, all that time counts towards PSLF credit, even though you haven't been making payments. So that is really exciting, but remember that you don't need to take your loans out of administrative forbearance in order to make qualifying payments at this time. So this is a confusing piece. If you choose to use the PSLF help tool to complete your application, many borrowers are unsure of how to proceed when they get to the question on this slide. If you think you've already made over 120 payments, the PSLF help tool might not let you choose that option. It's a glitch of the system. So just ignore it and just choose, no, I haven't made 120 payments and move on. Don't let this question hold you up from taking the necessary steps to get, to benefit from the waiver. No matter what you select on this question, the Department of Education will still review your account in full and, make sure that you get the qualifying credits that you are able to. Finally, from what we have seen, notices with inaccurate PSLF payment counts have been one of the biggest sources of confusion with the PSLF help tool. If you are consolidating a FEL loan in order to take advantage of the PSLF waiver, you will receive a letter from Fed Loan Servicing after the consolidation is complete, noting that you have one qualifying PSLF payment. Don't worry when you receive this letter. Here is what is actually happening. This is an auto-generated letter that is hard-coded to review under the normal program requirements that we reviewed at the very beginning of the presentation. So when you consolidate your loans, you'll be asked if you're doing so to take advantage of PSLF. Since you are consolidating for the purposes of PSLF, you'll say yes. And after your consolidation is complete, Fed Loan will notify the Department of Education, who will review your account to determine how many qualifying payments you've made towards the PSLF waiver. You'll then receive a second letter from Fed Loan, or likely at Mohila at this point, saying how many payments that you've made towards the waiver. And as I mentioned before, this process can take a few weeks to a few months to complete. And the Department of Education does these in batches, so there's no concrete timeline from when you might receive notice from them. Okay, so let's review some important takeaways and then we can get to all of your questions. All right, remember that credit will be given for months during which any loan type was in repayment status, even if you didn't make a full or on-time payment that month. In addition, some periods of forbearance and deferment will also count towards PSLF credit because of that IDR account adjustment. So if you had 12 consecutive months of forbearance or over 36 cumulative months, those months will count towards PSLF credit, in addition to deferments prior to the year 2013. That's important to note. So then the deadline is October 31st, 2022. And by that deadline, you have to consolidate and or submit your PSLF forms. You have to get all of your paperwork in by this deadline of Halloween. And then follow the steps of the presentation in this order. Confirm your employers are eligible. All of you on the call, if you're working for nonprofits, I imagine you are, you qualify for your current employment, but don't forget that government agencies also qualify and certain other nonprofits. So, get the time that you can based on your past employment as well. Confirm your loan types. And if you don't have direct loans, consolidate your loans into direct loans. And then it's important that you do that step first, because the first thing that MOHELA will do is it will be to check your loan eligibility. So make sure you consolidate your loans first before submitting your PSLF forms. The consolidation application takes about 20 to 30 minutes online, and to be processed, it takes about 4 to 6 weeks. You do not need to wait until your consolidation application is approved in order to submit your PSLF forms, but you do need to do the consolidation application before you submit a PSLF form. Okay, so remember to submit your PSLF forms for any qualifying employer that you've had since October 1st, 2007, when the program began. Finally, file a complaint if you experience any issues. You could file a complaint with the Federal Student Aid Ombudsperson. I can share that link later. Or you could also file a complaint with the Consumer Financial Protection Bureau. And then you also, depending on what state you're in, you might have a state ombudsperson that you could also complain to. But I'm not sure if that pertains to anyone on this call. We keep a current list of ombudspersons listed out by state, which I can also share with you. We keep that on our website. So yeah, certainly can file a complaint if you experience any issues. Okay, I realized that was a lot of information, not the most exciting topic. I know it causes people a lot of anxiety. So let's take some questions now. And yeah, thank you for—
Want me to read the questions? Would that be helpful?
Yeah, that would be great if you don't mind.
Perfect. Well, we have a lot of questions on Biden's announcement today and what that might mean for PSLF, if anything.
Yeah, that's a great question. Okay, so yeah, the main takeaways from the announcement today from President Biden are that everyone is eligible to receive up to $10,000 of loan forgiveness if you make under $125,000 individually, or under $250,000 as a family. So that is like the main threshold. That's the main takeaway. If you also received a Pell Grant, you're able to receive an additional $10,000 in loan forgiveness or loan cancellation as well. This is going to, be an application process. And so that is something to keep in mind. We have, only the information that was available this afternoon that happened today. Super exciting day. We're super excited that the administration decided to cancel some debt, and this is a great start. And we will likely be having a lot of webinars that are hosted by our organization, and I'm sure others will as well, in order to parse out and walk people through the process of applying for forgiveness through this particular program. There were also some changes announced to the IDR program. So as I mentioned, there was the IDR account adjustment in April that happened that announced some changes to the program. And then the Biden administration announced some changes today. And those changes are all really exciting as well. And they're part of a broader rulemaking process that happens. And so these changes won't go into effect until next year, on the effective date next year. And so it's just something to keep in mind that won't be as automatic or as, as quick, I should say, you don't have to do anything at the moment to access that. But as we receive additional details, we can share them. We're constantly updating our website to make room for for all of the announcements that are currently happening. So I hope that was helpful.
Absolutely. Are parent loans included in this?
This is a great question. Okay, so Parent Plus loans, for those who don't know, are loans that a person takes out for their child's education, but they're in their own name. So they take out a loan for their child's education in their own name. Generally, Parent Plus loans are eligible for public service loan forgiveness because they are direct loans. So by default, they are included in the public service loan forgiveness program. However, they were excluded from the current waiver period. This is something that we continue to advocate on. We think that they should have been included in the public service loan forgiveness waiver period that ends in October, but they weren't. So one way that you could get your Parent Plus loans to also be included in the waiver period is if you have loans that Parent Plus loans that you took out for your child's education and also loans that you took out for your own education. If you consolidate those loans together, that is how you could get them to qualify for the PSLF waiver that is currently in effect. But unfortunately, there's no other way to get them to qualify under the waiver. However, in general, they do qualify for public service loan forgiveness. So if you were trying to attain, future credit towards your Parent Plus loans, you could do that.
I think you answered this, but I wanted to confirm. Does the recent transfer of some student loans to a new servicer disqualify borrowers from loan forgiveness? So I think it's just moving from bed loan to the other one.
So it wouldn't qualify. So this is a really exciting time to be doing student loan work because so much is changing every day. So a number of servicers actually exited the market this year. You may have heard Navient exited the market, and many of those loan holders were transferred to a company called Aidvantage. Some were transferred to Nelnet. So a lot of transfers were happening this year, not just the transfer from FedLoan to Mohila. So it won't affect your PSLF application. I will say that if you don't currently have FedLoan, or if you're not currently being serviced by Mohila, what it means is that you've never submitted a PSLF form. You've never submitted an employment certification form in the past. And so the federal government doesn't know that you're interested in public service loan forgiveness because Mohila is now the current, exclusive servicer for PSLF. So if you don't have them currently as your servicer, or you're not being transferred right now to Mohila, that's something to keep in mind. That is, that you haven't raised your hand to say, I want to participate in PSLF. So, if you follow the steps in this presentation, that would be a way of letting the federal government know that you're interested and that you want to have your time counted in that way. But the other servicing transfers, don't really affect this program. Just want to flag that if you don't have Mohila, this is what you should do.
Perfect. If you submitted your application without one of the employers sending the verification paperwork back, are you able to send that paperwork in if you receive it later? So I think, can you backtrack your employers if you need to? Is I think what the question is.
I think that you can. I think so you're saying you essentially filed all of your paperwork, but maybe one employer didn't get back to you on time. I think that you could employ, and I would recommend doing that before the October 31st deadline, so that you can get that time counted. But yeah, and if you do get rejected for that employer, you could always resubmit it again in full form. But I think that you absolutely could submit it now.
If your employer does not show up, what did you need to do to make them eligible?
This is a good question. You could download a paper copy of all of the PSLF forms. So you might want to choose to do paper forms for everything and get your application submitted that way, because the Department of Education will likely take some time to make sure that that employer is a qualified public service employer. So it could take some time for them to decide that. But if you're not able to generate the form on the PSLF help tool because it's saying that you're ineligible, even though you work for the state of Iowa or whatever it is, I would recommend downloading the forms and still submitting them, and they will still review them. So if that's something that people are encountering, absolutely submit paper forms.
Do you have to be enrolled in an IDR plan the entire life of your loans?
This is a good question. So to access PSLF, you need to be in an income-driven repayment plan generally. The standard repayment plan also qualifies, but under the standard repayment plan, you're set to pay off the balance of your loan after 10 years. And anyway, right? And so that means that your monthly payments will be higher under the standard payment plan. So that's why we talk a lot about income-driven repayment plans, because your payments could end up being a little bit lower, making it more attainable to kind of stay within your monthly budget and also achieve forgiveness at the end of it. So I'm sorry, I forget where I was going. Could you please repeat the question again?
I think you answered it. I think you're good.
Okay.
What?
Oh, sorry. No, so here's what I wanted to say.
Oh, okay.
So you don't have, so right now, the federal government is essentially waiving these two items of the PSLF program, right? So that if you didn't previously have a direct loan, or if you previously weren't on an income-driven repayment plan, you can get that time to count retroactively. However, after October 31st, the normal program requirements are going to go into effect, meaning that you should be on an income-driven repayment plan after October 31st. So that's the importance of this moment right now. So if you're not currently on an income-driven repayment plan, you can get retroactive credit, but you should be on an income-driven repayment plan going forward. So that was what I wanted to mention.
Thanks. Someone's asking me about the studentaid.gov website being down. I'm assuming that's just from traffic today. So I would say check back later and it should be back up.
Absolutely. I think it's receiving a lot of volume today. So
yeah, I've never had a problem with it. And I look at it all the time. So perfect. Sorry. You're trying to figure out which ones. If you made payments during the pause, does it have any impact on the 120 payments?
This is a great question. So remember I said that any time that you have a federal loan, like right now under the payment pause, while the loans are placed on administrative forbearance, all of that time counts towards PSLF credit. So that means that essentially you've gained 2.5 years of free credit because you haven't been paying on your loans towards PSLF forgiveness. Now, if you've made any voluntary payments since March 13th of 2020, when the payment pause began, you're able to get refunds for those payments. So that's something that you can request from your servicer. So it doesn't have any bearing on how many payments you'll have towards forgiveness, since these months already count towards PSLF. But if you wanted to request refunds for them, you could, which would put more money in your pocket if you did make voluntary payments this time.
Perfect. One question about the October 31st deadline. Do you think there's any chance that will be extended, or should people really get it in before then?
I would highly recommend doing this process before the October 31st deadline. It is really up in the air whether or not it will be extended. It is something that advocates have continued to push on. Members of Congress sent a letter this week asking that it to be extended, but we really don't know if it will be or not. So the best case scenario is that you get your paperwork in before this deadline and really take action now, because it's very unclear if it will be extended.
Perfect. These graduate loans count towards this, correct?
Yes, absolutely. So if you have undergraduate loans, graduate loans, subsidized, unsubsidized, all of these loans count towards PSLF credit. You just need to make sure that they have to be direct. So you log into your dashboard and it doesn't say direct next to them, that's when you need to consolidate.
A little personal thing. I went to grad school, and so I had 6 months off for my forbearance. So that's why I'm consolidating, so I can get those 6 more payments. Why not? Okay. Does temporary work over 30 hours per week qualify?
Temporary work over 30 hours per week. Yes, so it just depends if you were working for a nonprofit, a government agency. It doesn't matter what your role was. But if you were doing work, even for just a few months, over 30 hours a week, and you can get that PSLF form signed by that, agency or nonprofit, that is what matters. So yeah, even if you were just doing it for a few months, that doesn't matter.
Somebody has 4 direct loans that they pay through the same lender. Is it still a good idea to consolidate them now?
This is a great question. So just to review, as I mentioned, if you have older and newer loans, if you have FFEL loans and direct loans and you consolidated them together, they'll all be on the same timeline as your oldest loan. So the same is true for multiple direct loans. All these direct loans already qualify, but if you consolidate them together, they'll all be on the same timeline. So if you have older direct loans from undergrad, but also newer direct loans from grad school, if you consolidate them together, they'll be on the same timeline. So that's the benefit of consolidating all of them together.
When a borrower receives forgiveness after 10 years, does the remaining balance count as income for tax liability purposes for the borrower?
This is a great question. So for PSLF, it is not taxed. In addition, right now, this is also true of the announcement that Biden made today. So, you know, the Biden administration signed a bill that would make it so that it's not taxable. Any loan cancellation is not taxable through the year 2025. So it's unclear if they'll make that permanent, but what is permanent is that loan forgiveness under PSLF is not taxable. So that is a great question and applicable to today's announcement as well.
Okay. What if I worked as an independent contractor for a nonprofit? Do these hours count towards forgiveness?
This is a great question. So unfortunately, if you're an independent contractor or if you worked for a temp agency, but you were contracted to a nonprofit, that time doesn't count. It really matters who's on your W-2. And so, yeah, unfortunately, work, 1099 work or work through a temp agency wouldn't count for PSLF.
Is there a number anyone could call to work through their personal paperwork or an account?
So at the moment, we do not recommend anyone. We can't recommend any organization that is currently doing this work. However, we do have a website that you all can check out. It's forgivemystudentdebt.org. I can make sure it's shared later on as well. But it's forgivemystudentdebt.org, and it has shorter videos that are essentially this presentation but cut down so that you can watch them in shorter spurts and not be overwhelmed. But it also includes that list of ombudspersons and frequently asked questions. So some of what you might be asking might pop up in those FAQs. But yeah, at this time we don't have anyone. We can't take in individual cases at the moment, and we don't currently recommend any organizations for that.
If the IDR line isn't filled out on your direct consolidation loan summary sheet as an option, does that mean it isn't available as an option?
I'm sorry, could you repeat that one more time?
That's okay. If the IDR line isn't filled out on your direct consolidation loan summary sheet as an option, does that mean it isn't available as an option?
I think that is correct, but I would like to double check that. So maybe I can get back to you on that question. I don't want to give you that information. Thank you.
Yeah, absolutely. Okay. What if a student hasn't started repayments as of October 31st because they have been deferred since graduation? Will that impact anything?
So if you graduated and you've been in kind of the grace period that comes after graduation, I would still submit your PSLF form. So as I mentioned, if it doesn't matter at what point in your career you're at. You could be 1 month into your employment, you could be 10 years into your employment, you could be 5 years into your employment. This is essentially raising your hand and saying that you want to participate in this program. So even if you haven't been making payments because you graduated during the payment pause, or if you're currently in deferment, you could still submit your PSLF form to make sure that the federal government knows that you want to participate in this program. And then, like I said, if you do it every year, and if you do it when you switch employers, it's a good way to catch any mistakes, because so many mistakes have been made in the history of this program. And so that's what we would recommend. But yeah, understanding that your question is that maybe you haven't started working yet. So I would say as soon as you start working for a public service employer, then you could submit your form right away to make sure that you're on the books, right?
Perfect. I think we have one last question. If you are already on the public student loan forgiveness and you filled out your sheets, is there anything you need to be doing? Anything else you need to be doing right now? That's a
great question. No, I think so. Make sure that you are paying attention to the application process that gets rolled out through this announcement today. It won't affect PSLF really, like some of the IDR announcements might. But the forgiveness, the cancellation that was announced today is totally separate, and it won't affect your PSLF status or anything like that. But pay attention to what the application process would be like for that cancellation. So if you're already consolidated, you already have your forms in, there's nothing else that you need to do at the moment in order to take part in this program.
Perfect. Okay, one more came in. How do you tell which payment plan you are in? This person recently submitted an IDR application and is a little bit nervous she didn't switch to the right plan.
Yeah, I think you need to call your servicer and double check which repayment plan you're in. That is what I would recommend. That's the best way to tell that information.
Perfect. I think that's all the questions. So thank you for answering all those
Amazing.
questions and such a great presentation.
Oh yeah, of course. No, thank you for having me. And I'll be sure to share the resources that I mentioned on the call. And please let me know if there's anything else I can do in the meantime. But thank you for having me today.
Yeah, absolutely. Thank you all for who were able to attend today. I will be sending out the recording later this week and any other resources that Amy has. And if anyone needs help and has questions that were answered, please reach out to me at NAM and I'd be happy to either connect you or try to help you figure out those. We have a couple of NAM staff who have gotten forgiveness and are on their way to forgiveness. So we all have a little bit of personal expertise in this. So please reach out if you have any questions. And other than that, thank you so much again, Amy. This information was invaluable and we look forward to working with you again in the future.
Amazing. I hope you all have a wonderful day. Thank you.